previous video, we calculated the amount that the business should pay to SARS with regards to VAT, or that SARS owes the business with regards to VAT. But now today we're going to look at the VAT control account. We're going to use the same entries or the same transactions that we used in the previous video, where we used the two columns to calculate that same amount. So let's look at the VAT control account. Now the VAT control account is a general ledger account. It's a balance sheet account, and this account is the account that's used to calculate what is owed to SARS or what is owed by SARS. Firstly, we have to remember that on the debit side, we've got all the VAT input amounts. And on the credit side, it's all the VAT output amounts. But there's a little bit of a difference, and that is that when we did the columns, we had, let's have a quick look. When we did the columns, the output VAT here, we had positive and negative amounts all in one column. But now, when we're in the VAT control account, we're going to record on the credit side all the amounts that will increase your VAT output on the credit side, and all the amounts that will decrease your VAT output on the debit side. The same for VAT input. All the VAT input amounts that will increase the amount will be on the debit side. And if there's a VAT input amount that must be decreasing the VAT input amount we put into the business, it will be on the credit side of VAT control. So remember, we can't have a positive amount and a negative amount in a general ledger account on the same side of the account. So if I have a positive output amount, it will be on the credit side of VAT control. If I have a negative output amount, on the debit side of VAT control, and the other way around for VAT input. So let's now look at exactly the same entries we've done in two columns, but we're doing it now in VAT control account. The first one, we sold goods on credit, and we already established its output. It's increasing the amount. Let's have a look again. There's the amount, positive 52.17. It's increasing my output amount. So I'm going to put this 52.17 on this side. But because it's a general ledger account, I need details. It was on credit, so it is debtors control. And this transaction takes place when you record that in your three accounts. Of course, we're going to have VAT output account, which you will learn later about. We're going to have the debtors control, and we are going to have the trading stock and cost of sales. Right, now let's look at the second one. We bought goods. We've already said that it's input, and it was cash. Input is on this side. The amount that we calculated was 117.39. So here we put the 117.39. It was cash. So it is bank. Let's go to the third one. Now this is where we have to think very, very closely and clearly. Return goods to a supplier. We said it's input, and we said that when there's a return, we're going to decrease the input amount. So this 60 Rand input amount was decreased. If we now want to decrease it on this side, we're going to say creditors control. Of course, it's the creditor that's going to decrease. We're going to not owe him the money of this transaction of 400 Rand, and on that transaction there was the 60 Rand VAT, and it needs to decrease what we owe SARS. And that's because my input is decreasing, that I'm taking it to the other side of your VAT control. So if we now look at the next one, a customer returned goods, that means that that's also going to decrease the VAT output amount. We've already said it is the VAT output amount. So there's my 15 Rand. And now I can't put it here with the output because it has to decrease. And we said that if it decreases, it goes to the side. And it's debtors control that's going to decrease as well with that 15 Rand. Right, now the next one is allow a 100 Rand discount to a customer. So now again we're on the output side and we are allowing him the discount. So if we allow the discount, then we're going to decrease the output. If we decrease the output, we can't do it on this side, we have to do it on this side. So again, the debtors control is going to be decreased, and that's going to be decreased with 13 Rand and 4 cents. Right, receive 40 Rand excluding VAT discount. So we establish that it's an input because we received the discount. Input is on this side, but that it is now going to decrease the amount of VAT. So we are going to go back there and we're looking at the decrease of 6 Rand. So that will have to be on that side. 6 Rand discount received, and that would also be in the creditors control. You are welcome to write the extra bit here to say what exactly that was. Right, the discount allowed was cancelled due to a non-payment. Discount allowed, we said, is for output, and that was cancelled. Then we said in the previous video, when we did the one column, we said it's now increasing my output amount. So if it increases the output amount, it must be the output amount that increases, 13 Rand and 4 cents, and that is debtors control. And you can put in brackets if you want to the discount that was cancelled. After that, we have the discount that we received that was cancelled. Now, when we received the discount, it was a negative. It decreased my input, and it was there on the credit side because it decreased my input. Now I've got to increase my input again because it was cancelled. So again, creditors control, and you can write the detail discount cancelled at the bottom or in brackets if you want to. Then we have the owner took stock, and we did that whole calculation of what the owner took there, and we said we treat it as a sale. So here we're going to say drawings. Although we treat it as a sale, we write it's for drawings, and the amount was 109.09. Now let's see what is the balance in this account. It's a normal balance sheet account, so we do a normal balancing of this account, and let's see, 52 Rand 17 plus 60 plus 6 plus 13 Rand and 4 cents plus 109 and 9 cents, and that's giving me 240 Rand and 30 cents, which is the bigger of the two. So I can write it there, and then I'm going to minus the 117.39 minus 15 minus 1304 minus 6, and that gives me 88 Rand and 87 cents. So that is the 88 Rand and 87 cents, which is the balance carried down, and then the balance brought down on the credit side of 88.87. And now, if you look at this 88.87 on the credit side, this is a balance sheet account. If it's a credit balance, it's a liability. That means that the business owes SARS. This needs to be paid to SARS. And look what we got here in our 2-column activity of our previous video. 88 Rand and 87 cents paid to SARS. So can you see how we record our transactions, the same transactions, but into the VAT Control account? Important thing to remember is that VAT output is on the credit side, VAT input on the debit side, but when VAT output increases, it's on the credit side. When VAT output decreases, it's on the debit side, and the other way around.